earnings and more earnings. Tell us a little more about what you thought from, let's say, JSW Steel's point of view. I mean, the numbers were great, best in class, best ever EBITDA per ton. But the stock is getting a little cautious. So how would you approach some of these metal majors given the massive rally?
Afternoon, Surabhi. No, absolutely. I think a lot had got factored in terms of the delivery of numbers when it came to the ferrous players. But JSW Steel, on a lot of criteria, actually had outperformed. So I think it was a little bit in terms of when the news actually came out and the results actually came out, some profits being booked on the table. But I think the highest ever quarter revenue at 28,900 odd crores. You look at the reported EBITDA per ton. The value-added products as a percentage are increasing at a substantial pace in the overall pie. The kind of iron ore that they mined at 9.8 million tons and more to come in the next few months as they probably integrate this more with their operations as well. The debt equity has actually gone down to almost 1 times. I think there is a lot on track for JSW Steel. I think the cycle itself, in terms of realizations and demand, in terms of demand specifically, looks very, very strong. Yes, input costs, specifically iron ore, coking coal, have moved higher. A little bit of pass-through is expected, some tapering off in terms of flat prices in the next few months. But the demand, because it remains inherently strong, the capex in terms of the Vijayanagar operations and expectations in terms of maintenance of a very strong profitability because of the debt levels going down, I think the momentum can very well continue. I think integrated players, Surabhi, Tata Steel, SAIL, can benefit even more in terms of reported numbers in this respect. So yeah, I think the momentum for these players can very well continue.
Good afternoon. Any thoughts on Dr. Reddy's?
Afternoon, Anuj. So as Ekta mentioned, right, US still remains to be a key driver for Dr. Reddy's. That contributes almost 38% of their revenues. And they've got a very, very strong pipeline. So if you look at their Para 4 filings, almost 46, 47 Para 4 out of the 92 ANDAs. They've also got around 20-22 odd FTFs that they have already filed. Again, I think in terms of India, Russia, I think these operations actually give them stability. As Ekta was mentioning, I think the Sputnik soft launch that we've seen, the expectations in terms of their R&D, specifically in terms of biosimilars and the PSI segment, I think that can be multi-year growth drivers for these for the company going forward as well. So yes, I think stable margins, expectations in terms of a reasonable earnings growth coming through, that should probably keep the stock stagnant. But I'll wait for numbers, Anuj. I think if the numbers are good, if the commentary is probably indicating that, and if it has a price strength in its stride, I think that will be the point to probably look at.
Sure. Any thoughts on insurance as a space and SBI Life in particular?
No, so Anuj, I think it's very interesting. And all these guys are now tweaking their plans. I think they've been tweaking that for the last 4 to 6 quarters. So if you look at their product mix, protection probably becomes a large pie and is expected to even gain strength going forward. So I think the kind of EBIT performance that can come through with this product change in the next few quarters can be substantial as well. Second, in terms of their core embedded value itself, because of the volume growth that we've seen, specifically during COVID times, I think what you probably expected to see in this part of the business itself should improve. Yes, I think the claims might have gone up as HDFC Life had indicated, and they've done a reasonable amount of provisioning, almost 750 odd crores. But solvency remains extremely strong. And because they've been in the business for so long, I think they're absorbing their fixed and operating costs very, very well. So the return on embedded value should actually see a quantum jump as more policies start coming through in the next few quarters, both because of the product mix, more in terms also in terms because of more and more people signing in, purely because of the COVID fear and scare, and ensuring themselves, covering themselves as well. So it's a very, very interesting space. Valuations might be a little bit expensive, but I think the space probably deserves that, in my opinion, because it is a growing space and we do like growth stocks. Insurance probably fits that bill.
Now let's get back to Mayuresh for one last question. Mayuresh, I wanted your thoughts on Glenmark. That's a stock which has been seeing a bit of a decline ever since the announcement of the IPO of its subsidiary.
Seems to be the case, Anuj. But again, I think the fundamental issue with Glenmark is the heavy investments that they have done in terms of their NCE molecule research. And you all know that there is no definite timelines for that. The kind of capex that they've probably put that, whenever the monetization happens, I think it's going to be a huge, huge plus for the stock. But I think it's a question of if and when. So I think that's the whole point. Aided by the whole ideology also of the IPO coming through. So I think it's largely underperformed, Anuj. My own sense is that let there be certain clarity in terms of the monetization path for all these molecules and some stability on the bottom line as far as the cash flows are concerned.